This is Business Nigeria. Focus today is on the government intervention in the forex market and IMF's call for the scrap of multiple exchange rates, plus the latest listing on the Nigerian Stock Exchange, that's the government savings bond. Dr. Austin Owenze, an economist with the Pan Atlantic University and financial analyst in Emeka Obiariri, will be joining me to discuss the trends. Welcome. I am Yemisi Lanredo. All right, let's begin with the biggest news from the Central Bank of Nigeria, which says it would, from next Monday, begin the sale of foreign exchange to Bureau de Change operators twice weekly. Acting Director, Corporate Communications Department, CBN, Isaac Okorafor, made this clear, saying the move was part of the Apex Bank's determination to sustain the liquidity in the forex market. It went further to say the BDC operators would henceforth enjoy twice weekly purchases at the sum of $10,000 each. All right, let's talk to Austin Uweze. Dr. Austin Uweze, first of all, let's begin with this latest move by the CBN, especially talking about beginning sale to the Foreign Exchange Bureau, and that will be twice weekly. Let's get your view on this latest move. And looking at what the IMF is saying, calling for a scrap of the double exchange rate, what do you think?
Well, I support the World Bank IMF recommendation to scrap the multiple exchange rates that we have in the system that distorted the market. And it's important that what the CBN is looking at, these are short-term measures that they are looking at. They have to look at the fundamental lesson and look at the long-term to find a lasting solution to this forex this thing. Instead of all this short-term, every month they come up with new policies and all that. They should be able to think through short-term thinking. It will not help the economy. It will not help anybody. So what the World Bank or IMF recommended of scrapping the multiple exchange rates is what should, is commendable. It's what CBN should adopt so that, the system will function and the market will be more effective. And then giving money to the BDCs, it's okay, but these are temporary measures, and the $10,000 a week, is rather too small if you really want to create a system, because the demand, first of all, they have to have a meeting with the BDCs and find out exactly what their weekly demand is and meet up with their weekly demand so that the market will, just one is that if you do that, it's not helping anybody. 10,000 a week is a small amount of money for them to be. They should first of all find out the need, what the requirement for every week, and provide them what they need. And then while doing that, they should be thinking of the long-term solution to the challenges we have at the moment.
All right, just before I bring you in Emeka Obiariri, let's take that IMF news calling on Nigeria to lift the remaining foreign exchange restrictions and scrap the system of multiple exchange rates in order to revive the economy. IMF emphasized that stronger macroeconomic policies are urgently needed to rebuild confidence and foster economic recovery in the country. Well, the Washington-based fund also forecast that the economy would grow by 0.8% this year. Well, this is affirming earlier forecast by the World Bank last week that the GDP would also grow by 1% this year. All right, Emeka, you must have listened to Dr. Austin Uweze, and of course, he's saying that IMF's call is commendable and that 10,000 naira sum to the BDC may be too small. What's your own opinion?
The IMF call is commendable, and we must also appreciate the current situation that the central bank is in now. What the central bank is doing, remember that the most important assignment of the Central Bank of Nigeria is to ensure financial sector stability. What the Central Bank of Nigeria is trying to do over the last 3-4 weeks is to ensure that we have some level of stability in the foreign exchange market. You will discover, a lot of burden has been put on the Central Bank of Nigeria. I've heard people tell the Central Bank of Nigeria, yes, it's commendable for them to merge all the different rates in different markets. But Central Bank, they are being very, very careful. Why are they being very, very careful? they are being very, very careful because Nigeria is a monoproduct economy. Our major source of foreign exchange inflow is the crude oil. And the crude oil prices over the last 3 months has been stable at between the $50, $55 mark. Output has inched up to about 2 million barrels a day. We've not yet tapped into other sources of forex revenue into the economy. I've always said it. There is a limit to what the Central Bank of Nigeria can do in ensuring that the financial sector is stable, in ensuring that the foreign exchange market is very stable. On the issue of giving $10,000 to the bureau de change operators, remember that the whole essence of having the BDCs is to create more retail outlets for those that seek for dollar for invisible transactions. Remember that people that are going to the BDCs to go and look for dollar are not people that are using it for capital importation, bringing in equipment that will add to the real sector of the economy. Most of the people that go to BDCs are those that are seeking for dollar either to pay school fees, to go on medical tourism, or even some other things that are not actually adding to our GDP. So for now, the central bank is taking every adequate measure to ensure that they control the stability in that market. What we should be concerned now, what do we do, especially on the fiscal side, to support the effort of the Central Bank of Nigeria to bring about an increase in the supply side for the dollar? That should be our focus. Much emphasis should be paid on the MDAs, the ministries, the partner agencies. What are the fiscal policy managers? What are the Ministry of Finance? What are the Ministry of Investment, Trade and Commerce? What are the NIPC? What are they all doing to support the efforts of the Central Bank of Nigeria to ensure that we have adequate supply of the foreign exchange to enable us to have a stable market?
All right, yeah, we know that with the CBN's intervention, the naira has rallied and, of course, strengthening against the dollar. Dr. Austin, let me ask you, do you think that the government can actually scrap that multiple exchange system? Is it possible?
It is possible, but they require political will to do that. In the sense that, there's so much vested interest in that sector. And a whole lot of people are earning income without working for it. So it's not a productive sector. The money they're making is not productive. So if you take away the vested interest, it's possible to really scrap the multiple interest. Unlike the other senator said about the fiscal side, the fiscal side is weak. And when the fiscal side is weak, there's not so much the central bank can do. So they're able to stimulate the economy. It's not only the CBN alone that will stimulate the economy. They have to really implement what the fiscal side is, the policy direction they have taken. So, but there's not, it's like everyone, the fiscal side is weak and they're leaving everything to the monetary side, the CBN handles, to provide stability. But again, without short-term measures cannot really provide stability. So that's why there's a need for the Ministry of Finance and other fiscal side, should be able to, come up with a clear direction so that on how to develop the economy. And then the CBN will begin to implement, using the monetary side to implement those strategies they have come up with. So that the thing is that there's no sync. There has to be a sync between the two regimes, the fiscal regime and the monetary regime. That now is that the CBN is the only one that is really coming up with it, and there's a limit to what they can do. And again, monopolizing the foreign exchange market is another challenge that we have. CBN to really democratize the foreign exchange thing and not monopolize it. That way you liberate the market and the process of demand and supply and competition will come in to be able to really bring stability that we are seeking for. So the policies today, and they distort the market. So that's just what the CBN has to do. They need to find a way of democratizing and not monopolize the foreign exchange market.
Markets. Okay, gentlemen, we have to take a break now. When we come back, we'll be looking at the forecast by the World Bank that the country's GDP will grow by 1% this year. Of course, IMF also affirmed that. But that would be after the break. And of course, we'll be looking at the government, the latest listing on the Nigerian Stock Exchange, talking about the government savings bond. Just stay with us. You're watching Business Nigeria, and our focus has been the government intervention in the forex market and, of course, IMF's call for the scrap of multiple exchange rates, plus the latest subscription on the Nigerian Stock Exchange, talking about the government savings bond. I've been speaking with an economist with Pan-Atlantic University, Dr. Austin Nweze, and also a financial analyst, Nemeka Obiariri. All right, just before I went on that break, I was saying that when we come back, we'll be looking at the forecast by IMF, saying that the country's economy will grow by 0.8%. Of course, that's affirming earlier forecast by the World Bank that the GDP will grow by 1% this year. Now, in your view, by 1%, by 0.8%, Dr. Austin Nweze, do you think that should be a cherry news for the country?
No, it's not a cherry news because from 1% to 0.8, the confidence level is diminishing, and in any investment, investment is all about the confidence. The confidence level is a bit low. And until we begin to encourage domestic investment by Nigerian entrepreneurs and government creating the environment for them to invest, and there are a lot of things the government can do to stimulate the domestic production. Okay? So the government should select some sectors and begin to provide raw material base for those sectors, so that the economy can stimulate. We are now over 75% of what we consume are imported, and this puts pressure on demand for foreign exchange. So we need to begin to look at those sectors that governments can encourage domestic entrepreneurs, local entrepreneurs, to begin to, because the economy, Nigeria's economy, is in the hands of foreigners, over 60%. So we need to have control of the economy. No foreigner can develop your economy, and it's only Nigerians that develop Nigeria's economy. And government should realize that and make policies that are favorable to domestic production and not outsource our thinking. Everything that we want, we can get it in China, we can get it in India, we can get it in Europe and America.
Okay.
The economy can work like that.
All right, Mr. Nemeka Obiariri, just before I come to you, let's look at also the latest addition, the latest listing at the Nigerian Stock Exchange. Well, in a bid to deepen that market, the government savings bond, which opened for subscription on the Nigerian Stock Exchange this March, is the first of its kind in Nigeria and is expected to boost financial inclusion. The retail bond issued by the DMO will be offered monthly in tenors of 2 and 3 years, with quarterly payment of interest to investors. The April 2017 offer will come up on April the 3rd and also continue every first week of the month. Nigerians will continue to benefit from the FGN bonds, and the government savings bond is expected to help ordinary Nigerians to participate in the capital market, which will in the long run create benefits that will accrue to their investments. All right, Mr. Obiariri, let me ask you this now. What is the difference between the savings bond and other government bonds in the markets?
The savings bond is actually intended to, like you rightly pointed out, to bring about financial inclusion, to mobilize savings from the retail, very retail end of the economy. Now, the question, we overtly get excited over nothing in Nigeria. The whole essence of borrowing by either private or public sector is to fund projects. And now the excitement is that the federal government of Nigeria has created savings bond to be able to tap in savings from the retail end. Those at the retail end, we're looking at those that are of within the lower base of the economic pyramid. Now you ask yourself this question. Why are they borrowing this money? So what is the whole essence of this savings bond? What projects are they?
Yeah, we seem to be having connection issues with Nemeka Obiariri. But let me come to you, Dr. Austin Nweze. I know that the market, due to recession at a time, lost confidence. With this latest listing on the NSE, do you think that confidence could be restored?
Yeah, the confidence it will have a little impact, on the confidence level, the savings bond. and stuff like that. There's no clear strategy to be able to do that. When you have such a bond, the money will not be lying idle. It must be invested somewhere to generate income, which you use to pay dividends to or to pay back the people that invested in that bond. And it's a 30-year bond or 25-year bond and all that. And there must be some specific thing that is tied to some project that such bonds will be tied to, so that people will benefit from it. It's a good thing, and it's not the only thing that will stimulate the economy. Now, what we should also drive at is for other companies to get listed in the stock exchange. Companies like MTN, companies like Glo, companies like Airtel, all the telecom companies, when they get listed in the stock exchange, it shows confidence. The whole thing will help to stimulate the economy, and not just the government bonds. The whole lot. There are some companies that should be listed in the stock exchange so that wealth could be shared. Nigerians will be able to invest, and businesses can borrow from that window, the second tier window in the stock exchange to finance their businesses. So rather than waiting for the banks and all that to give them loans and stuff like that. So it's a way of really creating wealth for Nigerians, and not just the savings bond alone. Companies should be able to get the courage to. But again, for companies to do that, they have to have confidence.
Okay.
So that's just basic thing that is happening there. There's lack of confidence, and that's why people are not really going into the stock market to get listed and create wealth for this thing. So which the environment, the policy inconsistency by the government is also affecting the whole thing.
All right, I'm told Nnaemeka Obiareri is back on via Skype. All right, Dr. Austin was saying that the savings bond is a way to create wealth for Nigerians. Now, but with this latest listing, do you think the market will recover?
To be honest with you, just like he pointed out, is one of the ways of encouraging savings culture among the retail end of the market. But the question still we ask ourselves is this. Every borrowing must always be tied to an asset. You don't just borrow for the borrowing sake. Are we borrowing to fund consumptions? Nigeria is the only country where I see DMO raise 20-year bond, 10-year bond, 5-year bond, 7-year bond, and we are not told on which particular assets are these bonds tied. Are we raising these funds to the bond market to finance rail infrastructure? Are we raising it to finance bridges? Are we raising it to do roads? This is the only country where people wake up and they say the federal government raised 200 billion naira, 50 billion. There is no asset tied to it. We mostly raise this money to fund the huge bureaucracy in Nigeria, to fund consumption, to pay salaries. Now the question is, it is good. It will help Nigeria to participate in development, in contributing, bringing about service. That's the whole essence of raising money. But upon which assets are these monies tied to? That is the question we should ask ourselves. Saudi Arabia, over the last 20 years, have never gone to the market to raise money. For the first time in the history of Saudi Arabia, for the sake of, because they want to diversify their the economy from oil dependent to go into other sectors. The Saudi kingdom went to raise $10 billion. What was the whole essence of raising money? Is to enable them have a yield curve that determines the risk-free rate for government that will also be a basis for other private sector to go and raise money. In Nigeria, that should have been the basis. If we have this asset, monies we are raising, tied to particular assets, but in Nigeria, it is not the case.
All right, lastly and briefly, let me talk to you, Dr. Austin. Looking at Nigerians, of course, the bond is saying is expected to help ordinary Nigerians to participate in the capital market. But over time, we've seen a lack of interest in the government bonds. What makes this one different?
Well, the thing is that, again, the question is what's the capacity of the individual, the purchasing power of the individual to be able to do that. And since it's a government bond, the risk element is lower than any other bond. And this one is a savings bond. And we believe that we cannot save without investment. You have to invest and then save, or save and to invest. So this is an investment bond which if tied to a project that will return, some income to the investors. So this time around, unlike in the past, the people, there's this apathy towards government bonds and stuff like that. But this time around, it depends on the capacity of the individual. The purchasing power is quite low, so let's wait and see how they're going to respond. Once the market opens for the bonds, because of the low purchasing power.
Okay, financial analyst Nemeka Obiareri and an economist, Dr. Austin Oweze, an economist with the Pan Atlantic University. I must thank you both for coming on Business Nigeria.
You're welcome.
All right, let's tell you how the market closed today on the Nigerian Stock Exchange. Equities market closed the week on a negative note as the All-Share Index declined by 0.07% to settle the year-to-date return at minus 4.13%. In the banking sector, Zenith International Bank PLC led the pack of advances with 0.43% to close at 14 naira 6 kobo, and Diamond Bank topped the losers log with a negative 1.18% to close at 84 kobo. At the close of the market, well, it was a bullish sentiment as the number of gainers outweighed the number of losers at a ratio of 2-to-1, with Wamco PLC leading the pack of advances with a percentage change of 10 naira 23 kobo, and Breweries PLC led the pack of advances with a percentage change of minus 3.05. All right, Standard Trust Assurance was also active on the chart of top 5 movers with 100 million naira worth of contribution in volume, and last on the chart is UBA with 22.03 million worth of volume. Now, finally, Union Bank Nigeria PLC emerged highest dividend yield equity with Wando PLC, Zenith Bank PLC, and Cornwall making the list. Well, crude oil prices ticked upward on early trade Friday as dealers offered higher prices in key brands. At the London market, the Brent crude trades at $52 a barrel. Now, the OPEC brand trade at $50 per barrel. The price movement is as a result of increase in demand from factories in Asia. So that's Business Nigeria. Thanks for watching. I am Yemisi Landredo.